Tyler Laundon, Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, here with your Cabot Weekly Review. It is Friday, April 25th, and I'm recording this at about 6 a.m. Eastern Time, so a bit earlier than normal, but getting a jump on the day. So another interesting week for sure. I think the big theme out there continues to be uncertainty around tariffs, and investor sentiment continues to be in the tank. Yardeni mentioned this week, this is Ed Yardeni, mentioned this week that there's been 4 consecutive weeks of bearish coverage on The Economist. So a pretty good contrarian buy signal there. But we look at the market, the S&P 500 is now up more than 7% from the Monday lows. As we look at the day today, Asian equities are trading higher almost everywhere. And at the moment, the US and Europe are looking okay for Friday. Again, it's early, things can change, but that's where it stands now. We see the US dollar trading higher, crude oil futures are bouncing back, and because of that higher dollar, gold and precious metals are down a little bit. Again, the big story out there, aside from all the tariff stuff, is earnings season. And again, it's been better than expected. Just over 30% of the S&P 500 has now reported for the first quarter. The blended growth rate stands at about 8%. That's up from 7.2% late last week. And over 75% of companies are beating EPS expectations. That's in line with the 1 and 5 year averages. Earnings are surprising to the upside by nearly 6.5%. So again, a bit better than expected. Of course, a lot of uncertainty around tariffs. A lot of management teams talking about that, especially among the consumer-facing names, with a lot of goods coming from China. In other industries, we're hearing more and more about tariff mitigation methods, supply chain optimization, pricing, cost control, those kind of more bullish talking points that indicate that management teams are dealing with this and they have some strategies in place. Some of that may just be kicking the can down the road because they don't know what's going to happen. The tariffs haven't actually impacted just yet. But again, I think the overall theme at this point of earnings season is that things are better than expected. And that's part of why we're seeing the market do well. There's been some murky messaging around trade talks between the US and China. Things kind of appear stuck in the mud. Beijing denying that negotiations have started. Trump insisting that they have. Both sides are calling on the other to drop tariffs before they talk. So kind of a weird situation there, but we'll see where that goes. There's been apparent progress elsewhere with South Korea and India. Talks with Japan are resuming next week. So again, we're starting to see some thawing, and that is part of why the market is doing better. Also, some better messaging coming out of the Trump administration. It's a little bit less all over the place, at least in the last couple of days. Of course, no guarantees that's going to continue. But again, at the moment, things seem to be calming down. So as you can see here on the chart, S&P 500 is doing better. It's not yet back above where it was prior to Liberation Day on April 3rd, but it's making a pretty decent effort and back above its 25-day moving average line, which is this green line. As far as stocks, I'm going to be a little bit all over the map today. Again, it's earnings season, so kind of spreading things around and taking a really wide view. There are not a lot of small caps that have reported yet. So we have the S&P 600 small cap index here, which is not doing as well in terms of the recovery as the large cap and NASDAQ indices, partly because this threat or risk of a US recession is still out there. It's higher than it was a few weeks ago, and that could hurt small caps harder. But small cap index back to its 25-day moving average line, and we'll get into more small cap earnings in the next couple of weeks. But at the moment, this is a bit of a backstory. In terms of the 10-year yield, here it is here at 4.3%. It's kind of hovering around, bouncing around, depending on what the market and the dollar is doing. Not a big story there this morning. Gold hit a record high. This is the gold miners chart, the Van Eck gold miners GDX, and a little bit of weakness the last couple of days, but the big picture trend here is still up. As far as individual stocks, so throwing today's stock discussion into maybe 3 buckets. We're going to go through some of the companies that are continuing to do well that I think people are buying just because they're standout overperformers. And Netflix is certainly among that group. Reported last week, decent report, and the stock continues to do well, making a new high. We also have companies like Sprout Farmers Market. I have a few grocers in my two services, Early Opportunities and Cabot Small Cap Confidential, and I think it's just been kind of a safe haven. And there's also a side story to a company like Sprouts, which has healthy eating, organic, gluten-free, all that kind of stuff. So stocks like this continue to do well. I think you can camp out in some of the stronger grocery stocks if that's space is interesting to you. Also, AT&T, super conservative name here, but a solid dividend. And they had an interesting, good report, sounded much better than some of their competitors. So take a look at AT&T if you're just interested in something, again, that you can kind of hang out in, relatively safe play. And then a name like Spotify continues to do pretty well. Not a new high at the moment, but in the context of what's going on out there, pretty solid strength. Of course, we do have an earnings report coming up next week on April 29th from Spotify, so that could change things. As far as earnings winners over the last couple of days, some really, really crooked charts. And I'm putting these up here not necessarily to illustrate them as buy opportunities, but more to illustrate how crooked some of these charts are and how disconnected stock movement has been from company performance lately. So Hasbro is a pretty good example. Stock up 15% yesterday. And again, this is a company that you expect to have been hit hard by tariffs, but they're doing some things to mitigate that, and the stock responded well in response. ResMed is a medtech name. Just it's drifting lower here and then issues a good report and bounces right back up to where it was prior to a lot of the destruction coming out of Liberation Day. Another medtech name here, Intuitive Surgical. Not quite as crooked as the last two, but a strong report yesterday, and Intuitive Surgical is indicated to open slightly higher again today. Slightly stronger here is Penumbra. Ticker symbol is PEN. And I think this one is among the mid-cap medtech names, one that I would take a closer look at. Indicated to be up 2% today, or 1.6% at the open, was up 7% yesterday on a nice earnings report. And as you can see, it's hoping to break out above 300 as we go into Friday. Going back to crooked earnings charts, ServiceNow had a really nice move yesterday, up about 15.5% back to its 200-day moving average line. But nobody was really expecting this. When you look at the chart, there wasn't any indication here that investors were loading up on ServiceNow. It's not like it was trading higher over the 3 or 4 previous sessions. It just jumped on earnings. And so, again, illustrative of stocks where the market kind of had it wrong, at least in the short term. Alphabet should be up nicely today, or Google, of course, GOOG, indicated to open about 5.5% higher today, which would take it to 170, which is not quite to the 200-day moving average line. But again, a decent earnings report. In this environment, the stock has been beat up. So we're going to have a kind of a crooked looking chart here if Google opens as it is indicated to. If you wanted to make a play on software or medtech and you don't want to get involved in the individual stock risk, of course, my favorites are the medtech ETF, which we have here, the IHI. And as you can see, it has closed that gap from Liberation Day here on April 3rd. So it's back above that. And if we go to the software one, you could do the IGV, which is from iShares. And again, that is back to where it was prior to Liberation Day, right around its 200-day moving average line. All right, a couple of other companies that, GEV here, GE Vernova has reported, but I think these would be in my bucket of stocks that I might be tempted to take a position in or add to right now. GE Vernova came out the beginning of the week with a good report. In their electrification business is doing well. Their natural gas turbine business is doing well. And the chart was relatively resilient going into the event, which I think helps to increase confidence that if it does pull back, it shouldn't really pull back and do poorly. So that's GE Vernova. Palantir continues to do very well. Relatively strong or large holding in that IGV ETF that I mentioned previously. We haven't gotten an earnings report here yet, but Palantir back above 100 and looking pretty solid. AXGN, ticker symbol AXGN, is a small cap medtech name I talked about last month, and it looks okay. It looks like it has the potential to be one of those crooked charts upon earnings, which should be out next week. And they make a number of solutions for peripheral nerve repair. Very, very much a pure play on that. It's a small cap with 716 million market cap. So that's AXGN. Dutch Bros, ticker symbol BROS, is another that I think should be relatively resilient in a recession, and I think it's something that you could potentially take a stab at here or maybe add to a position. Again, we don't know how it's going to do. A bit of speculation going into earnings, but good company, and they're doing a lot, expanding and adding food to their menu. So some interesting things going on behind the scenes there. Another relatively strong one here is Bowhead Specialty, ticker symbol BOW. It is a casualty and professional liability insurance company. This one has always kind of interested me since it came public. Relatively strong chart. Of course, there's some dips and whatnot in here and there, but the insurance space has been relatively strong over the last couple of weeks, and Bowhead is certainly one of the stronger ones within that group. And last but not least, a biotech company here is ADMA, ADMA Biologics, ticker symbol ADMA, about 5.3 billion market cap. A whole bunch of plasma-based biologics. They're doing some interesting things, and as you can see, the chart looks relatively strong. There's not really supply chain risk here coming from China, just because it is plasma, so they're taking samples from within the United States and processing all of that here in country. So that is it for this week. I think the big picture theme, if we step back, is it's going to continue to be a bit of a rocky market through earnings season, but things are starting to thaw at the moment. That could, again, change by 9:30 this morning. But at the moment, things are looking much, much better, and it may be time to increase exposure to some of the stronger stocks out there. All right, that's it. I hope you have a nice weekend, and we will be back in touch soon. Take care.